All right, we've got a strategy. We know what actually drives growth. But how do we make it happen? This is where the rubber meets the road. This is innovation policy, the actual tools a government can use to build that more prosperous future.
So far, we've covered all the foundations, right? We've built a solid strategy, we've talked about why great management is just so critical, and we've understood that crucial shift towards idea-based growth.
And we know where all this hard work is headed. The goal is crystal clear. The ambition is for Cambodia to become a high-income nation by 2050. I mean, what a truly transformative goal that is.
So that brings us to the billion-dollar question. How can a government, say the Ministry of Economy and Finance, actively spark innovation without just, throwing public money down the drain? Let's break down the toolkit.
Okay, let's pop open the policymaker's toolkit. Now, to make sense of all the options in here, we can basically organize them into two main categories, or what I like to call buckets of action.
First up, you have your supply-side policies. Think of this as fueling the innovation engine itself. We're talking about investing in universities to churn out top-tier researchers, or using really smart immigration policies to bring in the best minds from around the world. Then, on the other side, you've got demand-side policies. This is like building the racetrack, creating the market and the incentives that really pull those new ideas forward. This is where tools like government contracts and R&D tax credits come into the picture.
Now, theory is one thing, but what actually works in the real world? Let's move from just looking at the toolkit to digging into the evidence to see which of these tools are the most effective at really driving innovation.
So let's start with a really big one of the most common demand-side policies you see all over the world, tax credits for research and development. It's a super popular idea, but the question is, does it actually lead to new innovation?
This chart shows us something pretty fascinating. For every single euro a government spends on these R&D tax credits, how much new R&D spending does it actually create? Well, the data here shows that, yeah, they can work. But look at that huge difference between countries. The big takeaway here is that the success of these credits depends completely on how they're designed. It all really boils down to this one core principle. Design is everything. Seriously. If you make a tax credit that's too broad, you're just giving away money to companies for R&D that we're going to do anyway. It's a total waste. But if you make it too narrow or too complicated, nobody will even bother to use it. The sweet spot, as the evidence shows, is when you target smaller firms and new innovators. That's where you get the most bang for your buck.
But there's a catch with tax credits, a pretty big one. They're not very helpful for young, innovative startups that aren't profitable yet. I mean, you can't get a credit on taxes you aren't even paying. So, what's the alternative? What if we just gave money directly to these firms through grants?
And you know what? The evidence for direct grants is really compelling. This study looked at a bunch of firms that applied for R&D grants from the U.S. Department of Energy. And the firms that actually won a grant saw a huge increase in patents compared to the ones that just narrowly missed out. For those young, innovative companies, a direct shot of cash can be a total game changer for that critical early-stage development. So here's the crucial point. There's a trade-off. Grants are awesome because you can target them to specific areas that have high social benefits, like, say, green energy. The downside? Well, the government has to try and pick winners, and that can be really risky. Tax credits, on the other hand, are more neutral. They kind of let the market decide which ideas are the best. But, like we just saw, they don't do much for those all-important, non-profitable startups.
And all of this brings us to an even bigger idea. Let's move beyond just talking about incentives and discuss a much more active role for the government, the state as a risk taker.
To get this, we have to talk about something called the Valley of Death. It's this dangerous gap in funding where so many promising early-stage ideas just die. They're way too risky for a bank loan, but they're not quite proven enough to get that big venture capital investment. And this, right here, is a classic market failure.
So how does a government help companies cross this valley? By becoming the first customer. Just think about how many technologies we use every single day, from GPS to the internet, that were first developed for the US military. By buying these new, unproven technologies, the government essentially de-risks them for the private market, giving them the runway they need to eventually succeed and reach the rest of us.
Okay, so let's bring this right back to Cambodia. Innovation isn't just about inventing something brand new out of thin air. It's also about something called diffusion, adopting and adapting existing, proven technologies from all over the world. And for an economy like Cambodia, mastering diffusion is arguably the single most powerful lever for really rapid growth. So after exploring all these different pieces, what does the whole picture look like?
let's pull it all together into one final blueprint for growth.
Achieving Vision 2050 really comes down to these 5 key pillars. It all starts with a focused strategy, because just having ambition isn't enough. Then it's about improving the quality of management, because even the best ideas need great execution. Next, that transition to idea-based growth is absolutely essential for long-term prosperity. We also have to strategically diversify by navigating the product space. And finally, all of this gets powered by smart, evidence-based innovation policy, the crucial tools we've been talking about today.
And I just want to leave you with this one thought. The economic growth Cambodia has pulled off over the last 30 years has been, well, nothing short of impressive. But the growth of the next 30 years? That's going to depend entirely on the decisions we all make now, turning these concepts into real, concrete action.
So, the roadmap is clear. The tools are right here. The only question left is, how are we going to put them into action to build Cambodia's future? Thank you for joining us on this journey.